Here in Davos, Switzerland, at the World Economic Forum for day 2, day 3. I'm not sure. It's blurring together, and a lot of people are here just completely active. Good morning and welcome to Bloomberg Surveillance live from Davos. John will be back with us a little later. It is a huge day for global markets, and certainly here at Davos. All eyes, first and foremost, will be on President Donald Trump's speech in Davos later today. Annmarie, it seems like that has sucked all of the oxygen out of the room.
Oh, absolutely. And the president was supposed to be delayed. He was on Air Force One, and then they had to turn around. They had to deplane, get another plane. There were some issues. I was told by Steve Witkoff, and now the World Economic Forum is saying he is set to speak this afternoon. He has made up his time. And really, we just keep talking about how the message is going to be twofold. Obviously, everyone is talking about Greenland, and I'm sure the president is going to bring it up. But for him, the heart and soul of his speech really needs to be the affordability concerns at home in America, because for him, the North Star is November 3rd, when it's the midterm elections.
And this is the reason why the focus is so split here. Yes, a lot of the U.S. administration is here in Davos, Switzerland, but back in Washington, D.C., we're also getting the Supreme Court hearing arguments over President Trump's attempt to fire Lisa Koch. Fed Chair Jay Powell is going to be sitting at those hearings in support of her. We've already heard some commentary from Treasury Secretary Scott Bessent on this exact issue earlier this morning. It seems like this is very much in their thought process as well.
He's saying Treasury Secretary Powell is, quote, politicizing the central bank. He went on to say that he's become frustrated with the Fed for refusing to do their own internal investigation and not sure why they would support Lisa Koch. So he is saying the fact that Jay Powell is going to the Supreme Court, that is politicizing the central bank. I think Jay Powell would probably say, well, you politicize this when you delivered a subpoena to my office.
Either way, there is a swirling backdrop of geopolitics in a very transactional Davos. This is all about business at a time when people are looking for deals and business leaders are looking to avoid getting roped into geopolitical conversations that could potentially be detrimental to their businesses. Right now in markets, we are seeing a bit of a reversal of what we saw yesterday. Certainly, Japanese bonds helping that mood, given the fact that we heard some nice tone coming out of the Bank of Japan and the second biggest bank in Japan agreeing to buy bonds. Right now, you are seeing stocks higher, but just a little bit. Right now, you are seeing just minor gains across the board, really just 0.2% for the most part. When you take a look at the bond space, 2s, 10s, and 30s, you can see, again, a bid into all of these bond issuances, but just 2 basis points earlier this morning, now down just 1 basis point on the 10-year yield. And take a look at the precious metals. You cannot keep them down, even though you've got some dollar strength today. Precious metals, gold, silver, at new all-time highs. Coming up this hour, we have an incredible lineup. RBC CEO Dave McKay, Gap CEO Richard Dickson, and Lead Edge Capital founder Mitchell Green. As we await President Trump's speech, deals are getting done. Business leaders are engaged in rapid-fire client meetings. We have the wonderful lineup of guests today, starting with the very own CEO of the Royal Bank of Canada, Dave McKay, who joins us here. Dave, wonderful to see you. Thank you for being with us.
It's great to be back. It's amazing a year's gone by already.
Right? I mean, what's your impression so far of this Davos? It feels very different than previous ones.
It's more intense. There's more leaders here than I think there's ever been. Over 850 CEOs, 400 ministers, 65 heads of state. So there's been a lot of dialogue already in the first kind of 48 hours. A lot of joint business government leader dialogue around investment. To your point, looking at making deals, looking at co-investment. Every country looking at diversifying trade, bringing business leaders with them to talk about co-investment, whether it's manufacturing investment, defense spend in Europe and Canada is going up. A lot of discussions about how do we spend $80 billion in Canada on defense. You know, what partners are we looking at, and how do we use that defense spending lever to attract manufacturing investment in automotive, energy investment. So there's a lot of grand bargain discussions going on with business leaders and I haven't seen that before. And so it's different. It feels different. It's transactional, as you said, but it's exciting at the same time. There's opportunity here.
Well, you're talking about the excitement, and yet you are Royal Bank of Canada. You are expanding in the United States. Mm-hmm. And right now, there is a breakdown in the relationship between these two countries. How problematic is that for you at a time where you have been expanding in the United States and you do see flows, at least in travel, going the other direction a little bit?
You know, I think we're in this temporary world where we're trying to figure out how we're going to trade going forward. But I come back to the core of USMCA. Canada really helps America with affordability. We make things in Canadian dollars. We sell it to the U.S. The U.S. buys it at a 30% discount, whether it's automotive parts, whether it's steel, aluminum, food, and a lot of our canola goes to the United States, and therefore we help keep prices down in the U.S. And if the U.S. were to bring all of that back, it's inflationary. You shortage of labor in the United States. So as you look at the core of USMCA, it's good for America. And I think that gives me comfort that we will come to an arrangement going forward, recognizing this is good for America. It's good for Canada, obviously, but it's good for America, and that's important to the president. There will be change. I don't think it'll be the same agreement going forward. But the core of it, I think, is so important to both sides, and that gives me comfort that we will continue to trade. Canada, and you heard our Prime Minister's message, I'm sure we'll talk about that, has to diversify trade. I think we've relied on trade to the U.S. substantially, a big part of our economy, and I think that the conversations that are happening before Davos, after Davos, in Davos are very much about, here's what we're good at. Can we find a grand bargain deal? Can we expand trade across multiple countries, whether it's Europe? A lot of discussion with South Asia and Asia, and a lot of discussion with the Middle East investing in Canada. And what's different about Davos this year, honestly, Lisa, it's risk on Canada.
Let's talk about the Prime Minister's speech. The sharpest tone I've ever heard from Mark Carney about Donald Trump without mentioning Trump's name. He's talking about a new world order, saying these middle countries, if you're not at the table, prepare to get eaten. Does that make it harder when you're talking about things like watching the USMCA trade deal? Do you think that the relationship is going to become more challenging between Canada and the United States?
I think relationships are about value exchange. And if there's good value exchange and you both see a benefit to that, then you're going to find the right place. So when just as I said, there's great value exchange. $400 billion go back and forth across the border every year because there's value. We're the #1 trade relationship with 36 states. Most of those are red states at the end of the day. So when we think about the importance of that relationship beyond that federal level into the state level, it's really important. So I think you come back and you say, it's good for America, it's good for Canada. That's the basis for an exchange of value going forward. Having said that, I think the Prime Minister is very clear that we haven't done our role in defending ourselves. We haven't invested enough of our GDP in defense, and you've seen that commitment to spend that money. We have to do that. We have to increasingly defend ourselves and not just our economic security, it's our physical security. We have to play a bigger role in that. We have to defend the Arctic, and we have to invest in the Arctic, and it's a big part of the commitment we've made to NATO and we've made to the United States that you'll see a greater investment from Canada. We have to have dual-use investments, not just military, but commercial and economic investments in the Arctic, and Canada should play a role in doing that. So you're seeing that was a big part of his speech yesterday, and we have to create scale. We're in a world of scale. Businesses need scale, countries need scale, and I think the Prime Minister's message was we have to continue to diversify, but diversify in a way that you continue to build scale in what you need. So I think that's what I took away.
When he says diversify, does it mean maybe a new strategic partnership with China? Is that what you take from the Prime Minister?
You know, the Prime Minister was just in China a week ago, and it was a very important delegation that he led to China to kind of reset the relationship after, a better part of a decade where the relationship had separated. And part of it was to renew economic ties and to agree on areas where we definitely agree, and to say these are areas where we might not agree, but let's focus on where we agree and where we can build a future together. And I think that was a very positive step. You saw China make a commitment to resume buying our canola oil, and that's a very important market for canola. The United States and China are big markets. We ceded a small part of our automotive market, 3% to Chinese imports. That's an affordability issue. China will bring in affordable electric vehicles. So I think that's good for Canadians at the end of the day. So I think there's more to build on, and I think it's part of diversifying across multiple countries.
Okay, so we've gone all this time without talking about what you actually have done. You just had a year that's phenomenal. You had record revenues for any Canadian bank ever, and you have grown tremendously. You beat all of your targets. I'm just wondering, when you're talking about diversifying businesses, does it go to your business as well? Are you expanding in places like China? Are you still planning to expand in the United States?
Our second home market's the United States. We've grown wonderfully in the United States. We just launched a whole new treasury management platform in the United States, RBC Clear, that's had a great reception. A technology leap. We brought in $25 billion of new money from U.S. senior corporates, Fortune kind of 500. So the United States is our second home market, and we continue to invest there. We lend significantly to U.S. corporates. We lend in the mid-corporate space, in the commercial space, and we have the 5th largest high net worth platform in the United States. So the U.S. is very important to us, serving Americans, helping Americans grow. And I told the administration already, yesterday that we've invested significantly in the U.S. economy, and we're part of the solution, and we feel very welcome in the United States. So it's a big part of our strategy. To your point, our strategy has not included China up until now, for all the reasons where we didn't have significant diplomatic ties. We didn't see the basis for that investment, and now we have to review that. I can't say how we would go back in, but if the trade continues to diversify and Canadian corporates invest in China, then we will have to be part of that. What I'm focused on now is the Middle East. Significant investment commitments from the Middle East to Canada. I think one of the themes of Davos is Middle East is a great place to invest. Abu Dhabi, Dubai, UAE on that side, Riyadh, and Saudi Arabia, significant commitments on both sides, and you'll see a greater presence from RBC in the Middle East as well. So yes, to your point, it's a great question. You're seeing RBC become a more globally connected bank because Canada is going to become a more globally connected country, and the U.S. is already an incredibly globally connected country.
20 seconds.
Yeah.
One word answer. Is this year going to be better than last year in terms of deals? We've entered the yield very strongly on the senior market side. I'm feeling there's very good momentum. I don't want to see it derailed, so I'm very positive about the year in the future. I feel good, yes.
Doesn't want to jinx it.
That is a wonderful way of not giving a yes or no answer. RBC CEO Dave McKay, always a pleasure to have you. Thank you for being with us. Coming up next, Gap CEO Richard Dickson coming to join us. We are also going to be getting Morning Movers with Danny Burgers. We're going to be talking about Netflix after they reported earnings after the bell yesterday. From New York, from London, from Zurich, from the Alps, this is Bloomberg Surveillance. Bloomberg Surveillance from Davos, Switzerland. Welcome back. We are here with markets trying to retrace a little bit of what they gave up yesterday. You are seeing a bit of a bid into U.S. equities, but really fading throughout the morning, up just 0.2%. A bit of a bid into bonds, but now 10-year yields down just 1 basis point. A bid into the precious metal space. This has been an ongoing theme as we hit new record after new record, and just a little bit of dollar strength, 117 on the euro-dollar cross. 3 hours away from the cash open. Here are your morning movers with Danny Burger. Danny.
Hey, Lisa, we got Netflix earnings after the bell yesterday, and the numbers were good, more subscribers, though it doesn't necessarily lay at that number. But the issue for them was the cost. They say that in 2026, they're going to spend 10% more than they spent in 2025. Then you add to that the acquisition of Warner Brothers Discovery. So costs stack up. They say it's necessary to invest in the properties to get people to watch Netflix, but those shares falling 6.7% in the pre-market this morning. Elsewhere on the move to the upside this morning is United Airlines, shares up 3.5%. Much like Delta, strong earnings thanks to luxury and business travel. Both high spenders in domestic and abroad did well. That intercontinental travel still looking good for them. The rewards program also looking good. The CEO, though, did say that this was a conservative outlook on their part. Finally, Kraft Heinz, those shares are sinking in the pre-market trade. The company registering shares being put up for sale, potential sale, by Berkshire Hathaway. The amount of shares that are being put up would essentially mean that Berkshire Hathaway is exiting its entire stake in Kraft Heinz. Warren Buffett himself had been really critical of the fact that Kraft and Heinz will be breaking up, but this would also be a bold new move with Greg Abel, the first time at the helm of the company. Those shares falling just under 5% in the pre-market. Lisa?
Thank you so much, Danny. We are here currently looking at some of the retailers. Gap seeing a steady sales rebound in its recent quarters, led by its namesake brand and Old Navy. We have the CEO of Gap Inc., Richard Dickson, here on site, looking like a poster child for the Gap. You always do. You look fabulous, as always.
Thank you.
I want to start with, we've been talking about how this Davos feels different. It is a transactional Davos. This is one where virtue signaling seems to have gone out the window. And you're here talking about your initiative to be sustainable with water and your Get Blue initiative with Matt Damon. How much do you feel like you're going against the grain here?
You know, I think Gap as a company has always prided itself on doing what's right. The origin story of our company was bridging the generation gap. We've evolved over the years to a purpose that we believe is incredibly powerful, which is bridging gaps to create a better world. And identifying that as a really important narrative in Davos, it's been about a dialogue. And that's really what Davos is about, having dialogue. And we believe the context of the content here, for us, has always been about purpose and profit. there's not one without the other. I mean, the more profitable we are, the more purposeful we can be. The more purposeful we are, the more profitable we can be. And so we think of ourselves integrating both, and I think that is the representation of our company. And here at Davos, we're doing just that. I mean, you mentioned the initiative that we're doing with Matt Damon and Gary White with water.org. We've created a campaign together called Get Blue, inspired by the Red campaign, which, by the way, Gap was a founding partner of. So it is part of our heritage, and we take a lot of pride in that. As you may know, water is an incredibly important conversation around reduction, recycle, reuse. It's scarce. What we were incredibly inspired by is this stat where 2.1 billion people today do not have access to clean or safe water. 2.1 billion people. And so that is a gap between those who have water and those that need water. And we believe Gap's on the forefront of creating that conversation here, soliciting more partners to get behind it. And we take a lot of pride in that effort.
But don't you feel like this Davos feels different? That there aren't as many people who are interested in hearing that message? And maybe it goes to the sort of divide between generations. But here people are looking to do business. They want to get deals done. They want to make money. They want to figure out what makes sense. It's a much more sort of practical, not touchy-feely type of Davos. Don't you feel that in a really concrete way?
I wouldn't disagree with that. But I do think as we are in Davos, the topics of conversations, obviously, minute to minute, we're getting lots of different updates and how the world changes. And obviously, there's a lot of business leaders here. There's a lot of dignitaries here, government leaders. And it is a merge. It's a merge of all of that topic and conversation. So while there's dialogue, I think, on multiple subjects, it is true probably that the world of sustainability has not necessarily been the topic of conversation. But we at Gap take a lot of pride in the integration of that as part of our strategy. 50% of the world's GDP is dependent on nature. We're partners with nature, whether we like it or don't like it. And so it is a really important part of the dialogue. It's an important part of our business strategy. We can't make the great clothing that we do without water. And if we're intending on growing our business, well, we have to make sure that there's water in the world. And then that adds responsibility to what we do. And we're very, I'd say forthcoming around the fact that we're making progress, but it's certainly not perfection. And I think we're a champion here this week at Davos.
Davos is certainly a place for dialogue. Also, in the absurdity of it, I heard this whole pitch from Gary White and Matt Damon because I sat next to them randomly at a dinner.
Okay.
And I'm curious to know, I remember that Gap Red campaign. It's also profitable.
Yeah.
It is a way to spark consumer excitement and get people in. What are you actually planning for the store?
Well, that's a good point because I think done well, it drives relevance. And relevance can drive revenue. And in the context of that integration, it is one and the same, right? So the Red campaign, which we were a founding partner of, is a great example. Taking a meaningful message that resonates and then developing products and partnerships and programs that bring more awareness and then more revenue to solve the problem. Get Blue is a very similar methodology. And it is a methodology to solve, if you will, the water solution. It's not necessarily the solution, but it is a methodology and a mechanism that we think is going to be very powerful. We're going to create a line of great clothing, obviously, that will be intended to drive more awareness, as well as part of the proceeds will go to help fund water.org. We've got amazing partners lined up, Starbucks, Amazon, Ecolab, and we're out here soliciting more support for it. So it will be a meaningful, what we call movement, that will help solve the issues of our day.
When it comes to relevance, right now the consumer has so many options. And we continue to hear from business leaders, though, the consumer is resilient. What are you seeing at your stores?
We concentrate on doing the best job that we can with great style, great value, great product, great quality. It is our job, day in, day out, to solve and attract that consumer to our brands. It starts with product, of course, but the narrative around that product is what drives relevance. And so we take a lot of time as storytellers to tell our brand stories. And we're doing a good job. I mean, it resonates. We had, as we reported last quarter, 7 consecutive quarters of comp growth, led by Gap, which is our founding, flagship brand, up 7%. And that's, again, consistently delivering. Old Navy, our largest brand, was up 6%. Banana Republic on the scoreboards, up in single digits as well. So it's resonating. The message is resonating with our consumers. Our product is resonating with consumers. And ultimately, that can create a flywheel. Better storytelling, better product, better retail execution. Retail is detail. Every detail matters. We hear every day, some good experiences and then some places that we need to work on. So we're always talking about progress, not perfection. But it's working.
To build on what Annmarie's talking about, the sort of choicefulness or pickiness that people have because of the greater focus on affordability and the fact that there has been a real erosion of that. We did speak a number of months ago, and you were saying that people will pay for quality. Are you seeing difficulty passing along prices, say, from tariffs or from increased costs more generally because of the price of commodities?
Well, I think, consumers are smart. They see value. They know authenticity. And we pride ourselves on being, an authentic brand with great price, great value, great quality, and great style. That's not easy, by the way, at scale. And certainly with all of the headwinds, tariffs included, we and our teams are doing a fantastic job organizing around the consumer value proposition. And so, as you can imagine, behind the scenes, there's mitigation strategies as we absorb tariffs. There's the day-to-day expenses that we have to consider running a business of our scale. But with the consumer in mind, all day long, we're able to present a portfolio of assortment of products that are appealing to them. And it is resonating. So the more that we focus in on doing what's right by the consumer, and we have the expertise to manage that day to day and what we call control the controllables. There are certain things that are not in our control, as we here sit in Davos. But what we can control, we can execute with excellence and deliver that proposition to our consumers and our shareholders.
To talk about the uncontrollable, because it does seem like there's a huge focus on geopolitics. How difficult is it to adjust if the regime of tariffs is shifting, if there isn't sort of a stable backdrop that you have to adapt to?
Look, it creates complexity. And our company is, in its 56th year. And there have been lots of different dynamics, both in, political, waves and policies and various different headwinds that we continuously have to deal with. And again, we go back to controlling the controllables. The dynamics of doing business today are quite complex. We all wake up in the morning and see the news and see that we've got new subject matter to deal with. But it's really important to stay steady and stay consistent, and in our case, stay very focused on the consumer. And we've been doing a good job of that. And so, again, headwinds will continue to come, but I think as long as we have a strong team, we really focus on our strategic priorities with the right due diligence and execute with excellence, good things happen, and you get that flywheel that continues.
Richard Dickson, wonderful to have you here. Thank you so much. Richard Dickson, the CEO of Gap Inc. Right now, let's head over back to New York and get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Good morning, Lisa. President Donald Trump on his way to Davos after a more than 2-hour delay. The president's plane had to return to Joint Base Andrews shortly after taking off due to a mechanical issue. President Trump was eventually able to get on a replacement plane. The president is still expected to speak at 8:30 a.m. Eastern, 2:30 p.m. Davos time. Treasury Secretary Scott Bessent says he's not sure why Fed Chair Jay Powell is supporting Fed Governor Lisa Cook. Powell is planning to attend today's Supreme Court hearing where the justices will hear oral arguments over President Trump's bid to fire Cook over alleged discrepancies on mortgage applications. Bessent says Powell is, quote, politicizing the Fed. The European Union is ready to strike back against President Trump's Greenland tariffs. EU President Ursula von der Leyen sharing the bloc will back Greenland with a massive European investment surge and strengthen its security arrangements. Von der Leyen went on to warn current rhetoric is creating a, quote, dangerous downward spiral between allies. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, the U.S. versus China.
China is doing a lot more on energy, it's just building out a huge amount of energy so that it can support its AI business. It's not just competition from within the U.S., but it's also competition from China.
We are getting into the close big event of the Davos of this day. We have, of course, that speech coming up in just about an hour and a half, I believe. President Trump will be speaking to the World Economic Forum. Right now in markets, you are seeing a bit of a bid into equities after yesterday's sell-off, although not necessarily retracing the losses. We're seeing just a gain barely of 0.1% for the S&P. You are seeing a bid into bonds, but barely down just a basis point. You are seeing that bid into gold persist up 2% 1%, hitting yet another all-time high. Under surveillance this morning, the U.S. versus China.
China is doing a lot more on energy, it's just building out a huge amount of energy so that it can support its AI business. They're more focused on applications as opposed to foundation models. But that said, I mean, we saw DeepSeek. So to my point about the ability of all these firms to earn the kinds of profits they do, it's not just competition from within the U.S., but it's also competition from China.
That was former IMF First Deputy Managing Director Geeta Gopinath on the rising competition between the United States and China. Joining us now, Mitchell Green, the founder of Lead Edge Capital and a seasoned investor in Chinese markets and in big tech just broadly. One of the seed investors in a lot of the big names that we talk about today. Thank you so much for being with us today, Mitchell.
Sure. Thanks for having me.
Do you think that there is a marked delineation between how far China has gone with the energy and some of the specific areas that they've developed versus the U.S.? Do you think they're getting an edge right now?
They're not getting hurt, I can tell you that. I think there's, it's interesting how much investor sentiment has changed actually in the last even year towards China. Like a year ago, if you look at Alibaba, I think the stock's up 90% or something in the last year. Tencent traded on the Hong Kong Exchange is up like 50%. These things trade at mid-teens multiples. And I think people are realizing that, China could be a big growth area over the next decade.
One thing you've been vocal about is that valuations are getting a bit stretched in the United States, particularly in non-big tech. The big tech names, as you said in the past, are going to be fine. It's sort of in the other places. Do you feel the same about Chinese tech companies, or do you think that the valuations still have a far way to go before they catch up to their U.S. counterparts?
There is definitely still a discount in Chinese equities relative to American counterparts, for sure. And I think there is. It is, the one challenge with a lot of the Chinese internet companies, Baidu, Tencent, Alibaba, is they frankly just don't grow that fast right now. The economy in China is not doing particularly great. I think that's pretty well known. But what's crazy is like a company like ByteDance, if something like that went public, and who knows, I'm sure it'll go at some point. We obviously are investors in it. But like the growth of that company, I think would like astonish people. And like I probably would be a catalyst for getting people excited about Chinese equities again.
Is it just an issue of valuations, or is there something endemic in the way that China is developing their AI versus the way that the United States is developing their AI that makes you more interested, maybe right now on a valuation basis, in what's going on in China?
The stuff we've done in China is gigantic businesses, ByteDance, Alibaba, and Tencent Music. So I will say this. When I read that a while back that the Chinese weren't able to get a bunch of these chips, and then yet DeepSeek came out, it did not surprise us at all. These people are like highly intuitive. They work their living butts off. They're like really creative people, and they solved a lot. They cut the training costs with a massive amount with using like software engineering and things. I think it's the early stages of it. I think what's going to happen is, we're not an expert on these models. Like, shame on us. We could have invested in Anthropic and OpenAI early. And by the way, the secondary markets are so robust now. We could have sold and made an absolute fortune. I think clearly at Davos, there's something happening with a lot of countries around the world realizing, like, if you're a European company now, you could go use a Chinese model. And a lot of these countries around the world are trying to find alternatives to U.S. companies. It's going to take a very long time, and hopefully we can course correct it and everything. But I actually think like more U.S. agitation around the world will benefit like smaller Chinese AI companies, and more people are willing to say, hey, you know what? In the UK, 5 years ago, 3 years ago, I wasn't willing to use DeepSeek or some Chinese model. Like today I will, and it's a fraction of the cost. And I do think that models like DeepSeek and others in China and in the US are going to drive pricing down for all companies leveraging these models a lot. Like, we think pricing is going to fall a tremendous amount.
So it sounds like the tension between Washington and Beijing makes you want to lean in to China instead of being scared.
A bit, yeah. Look, I mean, you tend to make lots of money when, be greedy when people are fearful, and the reverse. We bought a lot of ByteDance stock a year and a half ago when, at what we thought were extremely attractive multiples to like the growth rates.
When you say DeepSeek is happening without these U.S. chips, do you actually think it is without U.S. chips, or do you think that potentially...
I have no idea, is the short answer. I do think, like, we were like very... We were invested in Alibaba for a very long time, and I will tell you that what those engineers in China can do, and you can just read all this data, like number of PhDs, number of like patents being authored and all this stuff. Like China is accelerating in a lot of these different areas, and it doesn't surprise me. They're also trying to build a giant semiconductor business as well right now.
When it comes to the AI race, do you think they're on par? I mean, that's almost how Jensen Huang once put it to me. Or do you think actually China might be ahead of the U.S.?
Jensen would be the person to ask. And if he says they're on par or close to par, it wouldn't surprise me. I wouldn't bet against them, put it that way. I wouldn't bet against American ingenuity as well, but like the Chinese, it's funny, if you look at like a Tencent or a ByteDance and they think the rise of super apps and how people shop and like live shopping and all these things, a lot of internet, I mean, just think about TikTok, like all that came out of China. Like a lot of consumer, the US used to lead in like the trends for internet. A lot of those trends are now coming out of China.
One thing that's created some skepticism recently, and I know for you as well, has been just valuations in the U.S. We keep looking at that. OpenAI in particular, particularly given some of their funding rounds and some of their dependence on some of their customers to give them funding to buy, so the circular funding, et cetera. Do you think that that's kind of a linchpin that people are looking past, that potentially it has a systemic risk effect in the U.S. tech economy that people are overlooking?
I believe Howard Marks said, when it looks like a bubble, smells like a bubble, it probably is a bubble. And every like period of like tech exuberance, the PC revolution, the internet bubble in 99 or 2000, led to massive changes, which is what AI is going to. AI is going to be incredible. It's, by the way, people are going to overestimate it in the near term, and they're going to underestimate it in the long term. We could have sat here, if I was sitting here with you in 2000, well, we were in high school, but we would have been sitting here, and none of us would have talked about social media. Today, it is like a $3 trillion market cap category. The same thing will happen with AI. And in terms of, look, without going into the details of Anthropic or an OpenAI, there will be winners, and there are probably going to be spectacular losers as well. You have to, some of these like circular deals sure start to look funny. I think the party continues on until one of these companies has problems raising capital, but they sure haven't had any problem with it since. What surprises me, you'll talk to bankers and things like that. The IPO market is great. Like, look at Medline. The stock is up 50%, and it was a big IPO. It's like a $50-60 million company. I would think that in the next 6 to 12 months, we see one of these things go public. You'll then probably see a whole wave of other ones go public. And then, when you start to see the junk go public, you then probably realize you're near the top.
How conservative are you being right now? Are you deploying all your cash? Are you holding more?
We've been pretty conservative. We've taken a lot of our capital at our fund and invested it outside of Silicon Valley. A lot of like bootstrap companies. We're investing aggressively in software right now. I mean, the software markets have been destroyed. Everybody thinks companies like Workday are going to disappear. I mean, it's completely silly. It's a 99% gross dollar retention business. People think Salesforce is going to disappear. I've tried to use these cursors, and it's like what people don't. And I'm not a coder. What people don't understand is these software companies have giant distribution networks. R&D. These companies are not building semiconductors.
Yeah.
It's not actually hard to build it, but it's hard to get the customers, service the customers, add on products, and things like that.
Your business is investing in private equity and private shares in small companies that are going to potentially grow significantly. How much are you also investing in public equities?
We take a portion of our capital and invest in private equities. Given the sell-off over the last few weeks in software companies, we are buying public stocks right now. We are buying public software stocks today.
Much more so than private.
Than we were a month and a half ago. Yeah, for sure. Stuff's cheap. I mean, there are small, mid-cap software companies that have 99% gross dollar retention that trade at 12 times EBITDA and are like the stock prices are lower today than they were 5 years ago. Now, maybe 5 years ago they were overvalued, but that's really cheap.
Mitchell Green, wonderful to have you here. Thank you so much.
Appreciate it.
Really good to have you. That was Lead Edge Capital founder Mitchell Green here talking about artificial intelligence, one of the three prongs here at Davos. It's AI, it's deals, and then, of course, it's the geopolitics, which brings us back to what we're going to be hearing on the main stage with Donald Trump.
That's right, 2:30 local time. We'll be hearing from the President of the United States. It was supposed to be derailed because he had a little bit of trouble taking off, but nope, it's not. He is on time, and that's what everyone really is waiting for when they want to hear from the president. Because many people want to know what is going on with Greenland, what does he have to say about affordability, and they're just lining up to potentially also have a meeting with him.
Yeah, that's the other thing. There seems to be an increasing influence of governments in private businesses. And private businesses are very aware of this and very much on tenterhooks waiting for this conversation because they know it will influence them.
Well, especially when the United States is taking equity stakes in a number of companies.
Yeah, this is something that we're going to be watching. Coming up in the next hour, we've got TCW CEO Katie Koch. We've got BHP CEO Mike Henry on the huge rush to all of the mining products that build up the ecosystem of AI. GE Vernova CEO Scott Strazik and Republican Senator Thom Tillis, who's been making a lot of waves. We are seeing a bit of a bid back into equities after yesterday's sell-off, a question of the calming down of markets by the Bank of Japan and, frankly, by a big Japanese bank potentially buying those bonds. It seems like they're kind of the tail that's wagging the dog right now. This is Bloomberg Surveillance.
The U.S. must maintain leadership around artificial intelligence.
We're in an inflection point for AI.
Energy is a key driver of everything that we're going to be doing to drive this AI race.
What you're seeing is the construction of the supply side of the AI economy.
Productivity, I think, will go up for sure. Whether that translates into profits is what I'm questioning.
Bloomberg Surveillance, live from Davos with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from Davos, Switzerland, for our audience worldwide. Good morning, good morning. The second hour of Bloomberg Surveillance starts right now, and the focus is just one thing. Later on this afternoon, an address by the President of the United States, which is going to shake up this forum. The Europeans on edge, and yesterday the gloves came off. And it wasn't just the French, it was the Canadians as well. The reserved Prime Minister Mark Carney being very, very blunt about a new world order, calling it not a transition, but a rupture. What does it mean for financial markets? 2% from all-time highs on the S&P 500. And Lisa, credit spread still at historical tights.
Yeah, this isn't necessarily a wholesale dumping. However, this morning we had seen a bid into equities. We had seen a bid into bonds. That is fading as the session grows older, just turning negative in the S&P 500, now down about 0.2%. It just highlights the skittishness right now in committing to U.S. assets among this much volatility in some of the geopolitical headlines.
I have to say, before we get deep into Sal of America stuff, it's curious to me that we wake up this morning talking about Sal America after a 6-7 basis point move at the long end of the US curve when we saw a 20 basis point plus move in Japan. Shouldn't they have been the headlines today? Like Sell Japan? Isn't that the headline?
I think people don't care if it's Sell Japan because, yes, it's Sell Japan, but for fiscal concerns. And I think the real question is how much is it Sell America because of an unreliability in policy coming out of the United States? It clearly is igniting some pushback by the administration saying a couple people are speculating. And then, of course, your great conversation yesterday with Sergio Armati saying there is no alternative to Treasury. So try to diversify away from the United States assets and good luck to you.
The number one question I've fielded so far being here in Davos from people on the outside calling in, they'll say, so tell us, what's the vibe like? What's the vibe like? And my response to that is pretty simple. Draw a very fat line between the vibe that European officials are ultimately communicating and the vibe you get from business leaders. European officials on edge. Got that. Drama. Understand it. Americans and global business leaders still looking to America to invest, still bullish on the US economy. I did a panel about an hour ago, had several business executives and economists as well, and asked them, OK, we've talked 45 minutes about the risk on the horizon. Let's boil it down to one thing. Is the S&P 500 going to be higher or lower by the end of the year? What did everyone say?
Up. Higher.
The S&P 500 is going to be higher by the end of the year. So what's changed? And are we mispricing the crazy? And how crazy is this afternoon going to be?
What's just changed is the rhetoric. The president is obviously coming here with a determination to have some sort of negotiation or deal when it comes to Greenland, something he's been talking about since 2019. Obviously, the rhetoric is incredibly hot. You have it feeling like, for the Europeans, an existential threat. But business leaders are just almost looking through. They view all of this as they've pretty much been trained. All those reports about Trump wanting to leave NATO in the first term, actually Europe spending on collective defense, all that report of all these crazy high tariff rates, guess what? At the end of the day, it wasn't new rules of engagement. It was actually just the start of a negotiation. And I think that's what everyone is taking it here. You see a lot of people roll their eyes. They say it's a distraction. And the Treasury Secretary says, take a deep breath. I think there's going to be an off-ramp.
Let's take a deep breath and check out the price action. Lisa mentioned some of it. Equity futures were positive in the last 10-15 minutes, just rolling over a little bit, down by a few tenths of 1%. Coming up this hour, we'll catch up with the TCW CEO, Koch, the BHP CEO, Mike Henry, and North Carolina Senator Thom Tillis with a few things to say about central bank independence a little bit later. We begin this out with President Trump preparing to deliver a special address at the World Economic Forum right here in Davos, Switzerland. Bloomberg's Tyler Kendall stands by with more. Tyler, the president had a bit of a delay, but we understand now he's on schedule.
Right, exactly. Good morning, John. We are expecting President Trump to take the stage there in Davos, still at 8:30 a.m. Eastern, and it really feels like domestic and foreign policy are about to collide because the White House had already previewed that the president's remarks are supposed to be focused on affordability, as officials say that he will roll out in more detail his plans to reduce housing costs in particular. That includes a new proposal to allow Americans to pull from their 401ks in part for a down payment on a home without penalty. But we're really expecting him to also hit on some of that more populist economic messaging that we've heard from him in recent weeks. Hit on those proposals we already know, right? Like capping credit card interest rates, or the fact that yesterday, before he got on that plane to come to Davos, he signed a new executive order aimed at limiting institutional investors from buying single-family homes, though worth mentioning it does fall short of any new regulations. That's the domestic side of things, but it is going to be hard to ignore the geopolitical tensions that have been flaring as President Trump has downplayed threats from Europe that they could pull out of the U.S.-EU trade pact or issue their own retaliatory tariffs if the U.S. does follow through with the threat of a 10% levy by February 1st against those countries that have rallied support around Greenland. Now, I will say our own analysts at Bloomberg Economics say they see a higher probability that President Trump is going to ease rather than escalate tensions when it comes to Greenland. And, John, that is partly because after the president gives these remarks, he is expected to have a series of meetings on the sidelines there in Davos where we may be able to glean some more details on if there is a potential off-ramp, whether that be U.S. military assets moving into the region, getting more access, or some sort of economic cooperation agreement, because President Trump himself says he thinks the U.S. and NATO will emerge happy, in his words, from these discussions, despite what has been grave concerns from our allies in recent days.
Tyler Kendall with the latest in Washington. Tyler, thank you. That address just a few hours away. Let's get the view on Wall Street. TCW CEO Katie Koch joins us now for more. Katie, good morning. Good to see you.
Good morning.
It's great to catch up.
Being with you guys.
Thank you for being here. I was going back over what you said 12 months ago.
Oh,
Don't
good.
worry, it's all good stuff. Everybody was so bulled up on America, US exceptionalism. You were slightly more reserved about things. Give us an update on where you stand now.
Yes, so we all know this, the consensus at this conference is notoriously incorrect. And actually, someone explained why to me earlier this week, which I thought was interesting. They said because this is a gathering of CEOs. And by definition, we're very optimistic. We're up into the right people. They said they should change this to a gathering of just CFOs. And then we'll get a very different concept, which I was like, oh, there's some wisdom in that. But we're a little bit more cautious than everyone else. I would say this, I just don't think we had an edge on calling whether this was going to be a great year of U.S. hegemony. This is looking back to 12 months ago. What we did know was that even if that was true, all of it was already priced into markets in our view. And so we entered the year 15% underweight credit. And then, as we know, we got the volatility. And as an update on that, the day after Liberation Day, we stepped up and we bought $6+ billion of credit, closed the gap because spreads had widened. And that was very impactful for our portfolios. It led us to have 80% of our fixed income portfolios in the 26th percentile or better. So we're just, we wait for those moments of try and think different, wait for those moments of volatility and lean in.
April was certainly one of those moments. And in April, you read the headlines. We all did. Some of us wrote them. It was about sell America, sell bonds. And ultimately, you saw a weaker dollar off the back of that. It's interesting to me that you see a 6-7 basis point move on a 10-year treasury, and we're back to that story all over again. How do you think about the potential for diversifying away from U.S. assets in the months and years ahead?
I think this is an important question. My ultimate answer is I think there is going to be some marginal move away. I'd like to talk a little bit about Europe first, how I think they're going to react to the current dialogue, if they're going to react to it, and then the broader investment community. Sure. So if we start with Europe, they have two options here for leverage. The first is the anti-coercion, which you guys are obviously well aware of, and that let's just call that trade, slowing trade dramatically. The second is that they can dump U.S. assets, and they do own 40% of the foreign ownership of the U.S. bond market is European. So they, in theory, have a lot of leverage. Will they use it? I think that's highly unlikely because number one, it would be self-defeating. It would create damage to themselves. And number two, you gave that quote from Sergio before. Currently, there's not a lot of great alternatives. But let's broaden it out to the investment community and think short and long term. So for the broader investment community, I have been meeting with the world's leading asset owners here and all throughout the year. And I would say they are looking to diversify away from U.S. assets. And I would kind of describe it as quiet quitting of U.S. bonds. I don't think there's going to be a massive announcement. I just think they're going to look for opportunities to diversify away. From a short-term perspective, what happened last night? Because you asked about last night. I want to follow up on that.
Sure.
I mean, it's called Sell USA because we had the dollar sell off, the bond market sell off, and equities. That's not a good day in the U.S. markets when that happens. A day doesn't make a trend, so we have to see how that plays out. If it continues, this administration will get it back on track. Why do I think that? There's a lot of reasons, but a main one would be U.S. voters care more about lower rates than Arctic security, I think. I haven't polled that, but that would be my guess. And so they will likely get it back on track. What we're going to get, in our view, is more volatility, and that's great for us as asset managers. From a long-term perspective, I do think you're going to see this phenomenon I called quiet quitting and stepping away from the bond market. We can talk about that because I think there's a lot of interesting things happening
So
there.
let's build on that. What does that mean in terms of how high yields could go, what type of haven or not the bond market really provides, and whether you can start to trade on that if that is a longer-term phenomenon now?
Yeah, so why are they doing that? Why are they looking to diversify? There's a push factor, and I think there's a pull factor. The push factor has been pretty well reported on, which is the fact that they're overexposed to the U.S., because the U.S. has outperformed for a long time. We're highly indebted, and this is a fixed income comment. We're highly indebted. The currency people think could be weak, and we have a lot of policy uncertainty. So that's what would make people kind of want to move on. The pull factor, which people talk less about, but I think is super compelling, is that global diversification in fixed income markets is actually valuable for the first time in a long time. So John talked about, I think you said this on air, but we were talking about the fact that people sold treasuries. They also sold JGBs. That is true. Now, that caused spreads to widen out. Actually, at the very longest end, up to 50, 60 basis points. This is the highest yield we've had in Japanese bonds in my whole career. So I actually think the overnight selling of U.S. Treasuries was to buy some of these JGBs. I know that because that's what TCW has done over the last 24 hours. We came in our global portfolios. We were underweight Japan, and we used this dislocation as an opportunity to step into the Japanese market and close 80% of that position. So I know that other people are doing that, and I can make the argument for Japan. I can make it for parts of Europe. I can make it for parts of emerging markets, that there's just better relative value. And that is the pull factor that I think we'll continue to see play out. And why I'm saying quietly is because sophisticated investors, when they are in a position that they think is mature or they want to work out of, they usually don't scream it from the rooftops, right? They quietly will move away from that. And I think we're going to see more of that.
This is the sovereign debt side, that maybe the sovereign debt side of U.S. markets looks less attractive. Is it the same story when it comes to risk assets, when it comes to credit, when it comes to equities, when it comes to some of the momentum that we hear from the business executives that we're speaking to here at this forum?
Yeah, I do think it will be true of broad credit as well as equity markets. I want to say, though, we still see a lot of upside opportunity in U.S. markets, too. I just think you have to be very selective about where to look for that. Obviously, people are extremely excited about AI here. I'm kind of scared to talk about it because you've probably done that a lot already on this program. I have a lot of views on that. And so we are invested in that. We actually started investing in AI. We launched a strategy 10 years ago. So we've been in this space for a long time. I would say one of my observations here that's a little bit more balancing on AI is that it's very clear that the people most excited about it are the tech companies. But they have to sell that to someone. And in the CEO community at all these roundtables, I think there's enthusiasm to do it, but there is a lot of friction to get to be a true enterprise user of this. And what I mean by that is that you have to reimagine workflows and org charts, and actually people have to be willing to disrupt themselves. And so there is a lot of friction. Yes, the technology is amazing. As I said, we've been focused on it for a long time. It's going to transform the world. I really believe all of that. Massive revenue opportunity. I just think it may take longer to fully realize it on an enterprise basis than other people do. What we are super excited about right now is the power transformation that's supporting AI. And so 3 years ago, we launched an ETF, PWRD, a power ETF, that's investing in the power transformation in the U.S. the generation, the transmission, the storage. And why are we doing that? Because power in the U.S. is going from a sector that basically had no growth for the last 20 years to something that we think will double in growth out by 2050. And when any sector of the economy does that, that actually generally brings strong returns behind it. And here's the good news about power. You get this tailwind of AI's part of it. It's the electrification of everything. And then also that we're reshoring supply chains. That's creating constraints. You can invest in those themes in utility companies, right? So people aren't talking about utilities here, right? They're talking about AI, but that's a way that you can actually really benefit from it. And if you look at that ETF last year, it performed a couple of points short of NVIDIA, outperformed all the Mag 7 and parts of the tech sector. So this is like the picks and shovels. There might be other ways to approach these themes.
This is also an important theme for the president in a midterm election year when it comes to power and electricity prices. Do you see that as a tailwind when the United States and the president of the United States make something a priority?
I do, and I also think affordability is going to continue to dominate as a topic, and that is something that we have to solve in bringing more supply to the power market. And there's a real debate that's going to continue with that, and I think it's going to create challenges for some of these AI companies in scaling because the country is going to want to deliver affordable electricity to Americans.
You've given us a lot to unpack. My takeaway, buying Japan.
That's exactly right. And that, to me, 100%. To me, the headline
not to undermine everything else.
No,
just,
the headline to me was in the past 24 hours, TCW is
Katie
moving
put it in the
out
call
of
last night,
Katie, going
everyone
over
else
to
at the
Japan.
party.
Don't you feel like the headline is invest with TCW? We're already launching it. That's why I feel like the headline is.
I can't say that.
Bloomberg terminals everywhere.
There you go. She wrote her own headline.
Katie, thank you.
It's always fun to be with you guys.
Thank you very much. Thank you. Katie Koch there, the TCW CEO. Let's give an update on stories worldwide with your Bloomberg brief. Let's cross over to Vonnie Quinn for more. Hey, Vonnie.
Hey, John. Thank you. President Trump's special envoy says he'll travel to Moscow tomorrow with Jared Kushner to continue Russia-Ukraine peace deal talks.
The president is focused on that peace deal. It's a very, very important part of his agenda. The Russians have invited us to come, and that's a significant statement from them. I think everybody is embedded in the process and wants to see a peace deal happen.
Ukraine President Volodymyr Zelensky was planning to go to Davos for possible talks with President Trump, but said he wouldn't come unless there were agreements to be signed on security guarantees. NVIDIA CEO Jensen Huang is set to travel to China later this month as he looks to reopen the country's market for the company's AI chips. Sources telling us here at Bloomberg, Huang will be headed to company parties ahead of Lunar New Year. It's unclear if Huang plans to meet with Chinese officials. Larry Fink, the interim co-chief of WEF, is thinking about a venue change for the flagship event. On a post on LinkedIn, he mentioned Detroit, Dublin, Jakarta, and Buenos Aires as possible future sites. Relocating the event would be a blow to Switzerland, which has benefited from the forum being held in the Alps for decades. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next, betting on the US.
The US is the strongest economy in the world, the one who has the highest level of innovation. Right now is a little bit bumpy, but I would say that I wouldn't really bet against the US.
Live from Davos, Switzerland this morning. Good morning to you all. The main address a little bit later this afternoon from the President of the United States. Typically, we look at the price action at a time like this on any given morning, and I'll say something like, we'll see if this sticks. I've got no idea if this price action sticks because I've got no idea what the President's about to say later on this afternoon. Equity futures rolled over about 30 minutes ago. They're now down by a few tenths of 1% following yesterday's sell-off. And I have to say, there's no buying stepping into this equity market, at least no big buying so far this morning.
Yeah, and frankly, you're not seeing big buying step into the bond market either. So even though you've seen a little bit of calm there, same story again. All could be very much shaken up in just a couple hours' time.
So there is a big divide between European officials who are very bearish about the situation at the moment and American CEOs, and for that matter, global business leaders. Under surveillance this morning, betting on the US.
Diversifying away from America is impossible. I think that in any major asset allocation, one could probably think about having an overweight or underweight, but diversifying away from the US. And also from the dollar is a quite dangerous bet. The US is the strongest economy in the world, the one who has the highest level of innovation. Right now is a little bit bumpy, but I would say that I wouldn't really bet against the US.
That was the UBS CEO, Sergio Ermotti, in the last 24 hours or so. To catch up with another major business leader, I'm pleased to say that joining us now is Mike Henry, the CEO of BHP, a multinational mining company, in fact, the biggest on the planet. Mike, it's good to see you, sir.
Great to be here.
I'm sure you're happy. Metals are at all-time highs. We've been talking about it on Bloomberg Surveillance repeatedly. Copper higher. It's not just copper. It's base metals across the board. Is there pressure building to find more supply, and what's coming online?
Well, so I think it's been that pressure to find new supply that's underpinned the price escalation that we've seen, certainly in copper. So this is something we've been talking about for years. We talk about the fact that copper demand is ubiquitous, used in all walks of the economy. You layer in on top of that the energy transition, renewables, very copper intensive, and data centers. So data centers, your previous guest was talking about how energy intensive they are. That requires more copper, and yet copper is getting harder to find. Deposits are smaller, lower grade, deeper. BHP starts as the world's largest copper producer, and we've grown by 30% in the past 3 years. We have 4 big growth prospects ahead of us, including one in the US.
We've got it ready to go in Arizona, I believe. Resolution Copper. I talk about it on the show so often.
We're chomping at the bit.
What is taking so long to get that joint venture moving and get the copper out of the ground?
Look, so it's held up under a administrative injunction currently. So I can't speak highly enough of the support that we've seen from the administration. So the administration, be it Secretary Burgum, Secretary Wright, President Trump, have been very keen to get more mining and processing going in the U.S. because they understand the importance of critical mineral supply chain resilience. And of course, it would support the U.S. economy and specifically the Arizona economy as well. So we're all ready to go, but we have to let the legal process take its course.
How long has it taken? More than 10 years?
It's taken a long time.
Yeah, I mean, I guess, can you just quickly put a bow on that and say, is it going to be expedited in a serious way? Could we see it in the next, say, year or two, lifetime?
It's very hard to predict. We were almost there a few months ago, but it's been held up for a little bit longer. We remain optimistic that it will ultimately be a project that goes ahead. It could supply 25% of the U.S.'s copper demand for decades. So this is a pretty significant project, one of the best undeveloped copper deposits globally. And from a BHP perspective, it's but one of 4 major copper growth projects in the portfolio.
You sound like the administration has been really helping you and your business. At the same time, there's potentially more tariffs coming down the pipeline when it comes to this administration. How do you navigate that environment?
So, look, it is a more volatile, uncertain environment than it has been in the past. But from a mining sector perspective, 5 years ago, it would have been hard to get airtime for mining companies globally. There wasn't a lot of interest in mining as a sector. If anything, there was a lot of pushback on mining, where I think there's been a growing awareness of just how important metals and minerals are to the world. Continued economic growth, economic well-being of billions, energy transition, and the digital transformation. And so broad brush support now that we're seeing, certain strong support in the U.S., but support in other countries as well. That's something we should all welcome. But of course, there's going to be uncertainty that we need to navigate along the way. The tariffs aren't impacting BHP directly in any big way because we only have about 3% of our revenue in the U.S. Currently, but it's something we do keep an eye on.
You'll acknowledge, though, Mike, there's been a change in management in the last 10 years or so, and it was forced by investors. There was a switch from volume to value, to discipline. Is there a little bit more of a push now to get back to a bit more volume? How do you manage the discipline alongside the increased supply?
Look, so it is all about value. Now, we've been very deliberate in reshaping the BHP portfolio, and this is after a decade of being very disciplined when it comes to capital allocation. We've had license from shareholders to reshape the portfolio in a way that makes BHP more ready for the future. And a big part of that has been growth in copper and in potash, a fertilizer that's needed for sustainable agriculture. So we've been pretty successful on that front over the past a number of years, and we're looking forward to executing these big growth projects ahead of us.
You got South 32. That was the spin-off of about 10 years ago.
It was simplifying the portfolio. So
the reason I'm bringing up South 32 is because I'm wondering what you'll do with the coal assets, the iron ore assets of BHP as well. Is it something you might be thinking about, some echoes of that decision back then? So
we always have to have the discipline of thinking about what the right portfolio is. But we believe that the diversified model holds value. We're running the best iron ore business or best performing iron ore business in the world, generating strong margins. And then our growth focus is really in copper and potash. And that model allows us to have a very strong balance balance sheet and to fund growth through the cycle, which we see as a differentiator for us.
Mike, a clinic, as always. Let's catch up again soon. A lot to talk about. I keep bringing up resolution copper. It's right there.
I know. This is the
it's
frustration.
Like, there's the solution.
Huge copper just resource in the United States. Regulations. Different red
Secretary
tape.
Burgum and Secretary Wright seem keen to get the regulations, though, pulled.
I know. They want to do something about it, and Mike seems to be happy about the progress, and let's see if we make more progress in the year ahead. Mike Henry of BHP. Mike, thank you, sir. Appreciate it. Coming up next, we'll catch up with the GE Vernova CEO, Scott Strazik, as President Trump sticks with big tech and the AI energy bill. That's coming up next. Up and about 2 hours away. Check out the price action after yesterday's sell-off. No positive follow-through, no bounce whatsoever. In the last 30 minutes or so, we roll over on the S&P 500. Down almost across the board. The Russell showing a little bit of life. In the bond market, a sell-off yesterday worldwide. We've talked a lot about what developed in Japan. Big sell-off at the long end of the curve. Yields up by more than 20 basis points on 30s, on 40s. A marginal sell-off in the Treasury market, but it spooked investors because of what was also happening in the FX market, which was a weaker dollar against everything in G10. And that's why you get the headlines that you wake up to this morning about the Sal America trade and a multi-year diversification away from America.
Yeah, the price action matches a narrative that a lot of people want to put out there. So a lot of people are building momentum behind that. That said, there are signs that there is a different flavor right now, something more akin to what we saw in April with Liberation Day, with people not flocking to treasuries the same way. The idea that we're seeing now 30-year yields actually higher on the day in the United States, even as we see a rebound in Japanese markets.
Just a judgment on the last 24 hours, because I've got no idea what happens in the next several weeks, next several months, no clue. But if we're going to make comparisons to April, you're going to need much bigger moves than the ones we've seen so far to get the president to rewrite that speech later this afternoon.
We should note, though, that Treasury Secretary did come out pretty swiftly. And we do know that the president has said in the past he likes to disrupt the markets, and he sends Scott Bessent out there to soothe the markets. Scott Bessent came out to try to calm people and say, take a deep breath. There could be a solution. And don't you get the sense, talking here in the conversations we're having, especially the Finnish president saying by the end of the week, he thinks we're going to solve Greenland?
Will we get a Fed chair by the end of the week? Apparently not. This is from a US official just moments ago. The president won't announce a Fed chair pick while he's in Davos. So that's the latest headline on that front.
He doesn't know yet who it's going to be.
I don't think anyone knows who it's going to be. Maybe the name keeps changing. As we count you down to the cash open, let's get you some single names, some morning movers. Let's cross over to Danny Berger for more. Hey, Danny.
Hey, John, we got some earnings to work through this morning. Johnson & Johnson started with a rally, and now that has changed. In the pre-market, it is down 1% despite the fact it did beat, specifically on its cancer drugs. The issue with J&J that at first folks saw as a good thing is the fact that it's been had to discount some of its drugs because of a deal reached with the White House, and it was able to beat even despite that. Maybe that still is a big weight on the share price. It does see sales coming in between $100 billion and $101 billion for 2026. We also got Halliburton earnings. This is the fracking company. Those were a beat across the board. Shares rise 2.4%. With all the oil services company, we're going to be listening out on the investor, on the analyst phone calls to see if they say anything about Venezuela. They did call out specifically North America as a strong spot for them, so we'll see if anything is mentioned about other regions in the Americas. Finally, Netflix, those shares falling 7.2% in the pre-market. Sure, it was a beat on a lot of their metrics. The issue is the spend. They say they're going to be spending 10% more in 2026 than they did in 2025, which is $18 billion for those keeping track. And then you add on top of that of their planned acquisition from Warner Brothers Discovery. So that bit of the cautious outlook is what's sending shares lower this morning, John.
Danny, thank you. We'll see more from Danny a little bit later this morning right here on Bloomberg TV. Let's get back to it. The president pushing tech companies to pay for new plans to power AI data centers. Joining us now is Scott Strazik, the CEO of GE Vernova, an energy technology company. Scott, it's good to see you, sir.
Thanks for having me. I appreciate it.
I believe you sold out through 28.
We're pretty full for the next 3
You're doing all
years,
right, aren't
but we're ready to meet this moment. We're continuing to invest in more manufacturing capability in all of our factories in the U.S., and as there's more plants ready with pedestals that need the gas turbines, we'll deliver them.
Okay, put some oxygen into that story. Let's talk about this. How quickly has demand just absolutely exploded over the last few years?
Yeah, and gas, when you think about coming into 2025, we had 46 gigawatts on contract to future deliveries. We're ending the year with about 80 gigawatts, so we almost doubled our backlog over the course of 12 months. We expect that to grow substantially in the next 12 months. So this is a time when the world is very clearly seeing that gas is really a force multiplier that's going to enable a lot of economic growth, but also a lot of their power generation sources that'll be built above and beyond gas power.
It seems like all energy sources are not equal in this current environment, at least not politically. On one hand, gas, yes. Maybe even nuclear. We are seeing some more enthusiasm around that.
Yeah.
Wind, no way. There seems to be a real sense that offshore wind turbines are personas non grata right now. Is that your sense as well? Is that kind of how you're arranging your portfolio?
Well, there's no question that our order book for wind is much softer than everything else in the portfolio, and it's a complicated policy environment. At the end of the day, we talk about applying the right technologies where the right resources exist. Where there's good wind and a lot of land, we should build wind farms in smart ways that can make economic sense. But that is the softest business that we have right now. To your point, nuclear is gaining a lot of momentum. We're having more excitement and commercial discussions on our 300 megawatt small modular reactor than ever in the past, including in Europe. They're seeing the build that's starting to happen in North America, and I would expect for that to follow here. So probably in no administration is all technology sources treated equally. I wouldn't say that all technologies were treated equally during the Biden administration either. So you have to kind of take that step back and then just with every administration, serve them. And that's what we're doing.
How has your client mix changed? Because traditionally it's been utilities more than anything.
You bet.
And increasingly, as John was mentioning in the intro, it really is directly the AI companies and the hyperscalers themselves. How much is that changed the composition of your clients in the business?
Drastically. In 2024, our order book had very little negligible hyperscaler orders. In 2025, it was about 10% of our order book. In 2026, it very well may be 25% of our order book. So the growth is real. The reality is these are good companies take what puts their business model at risk and gains control over that. The reality is these companies need the electrons along with the data and the chip, and they're securing a lot of the long lead equipment they need to ensure that the electrons will be there when they need them.
Scott, I'm glad you mentioned the Biden administration because they did choose winners and losers in the energy space as well. We saw subsidies for EVs that we don't have anymore, and this administration squarely focused on oil. The president wants $50 a barrel. How do you plan for the long term if we have elections and we have another one in 2028?
The good news is that the world is going to need a lot more electrons for a really long time. And in the end, over the long term, they're going to need a diverse set of technologies. So we continue to invest in all these technologies.
Nuclear, though, what's so interesting is that I have heard optimism, Democrats and Republicans, about nuclear, but they really haven't been able to sell it yet to the public. How is that going?
Well, I think we're on the mantle of kind of making progress there. I think that we'll make progress in 2026. I think as people start to see it shift from talking about it to building it, I think sentiment's going to shift in a very material way.
Can that happen before, say, a midterm election?
Well, I don't know if that's not my role to figure out, what really moves the needle with elections. I'm just building power plants and serving the world with incremental electrons right now. But that we can do. And we're going to get a lot more stuff in construction quickly that I think is motivating for everybody involved.
That's the right answer, and I'm sure PR's happy with that. I just want to cut in because we're getting an update about the president's schedule and a bit of a sneak peek about what we might hear from the president in his address later on this afternoon. So according to an administration official, the president's speech later could touch on Venezuela and Greenland. Also, the president has about 5 bilaterals with European leaders in Davos, Switzerland at the World Economic Forum over the next few days or so. So that's a pretty packed schedule for the president.
Pretty packed schedule. I'm really not surprised he's going to talk about Greenland because that has been the topic du jour here at Davos. And Venezuela, can you imagine? It was just 2.5 weeks ago that the United States went into Caracas and captured Nicolas Maduro. Who are those 5 bilateral meetings with, though? That is going to be key because for the Europeans, what is going on with Greenland and this potential tariff threat on top of it has been existential for them. And they can't see through doing anything else in terms of deals with the United States because of it. Mark Carney yesterday, you brought him up. Oof. He said middle countries, if you're not at the table, prepare to be eaten. You're on the menu.
Hey, Scott, I'm not going to ask you about what's on the menu or Greenland, but I will ask you this. The world feels like, particularly sitting here, like it's becoming more polarized. For companies that have international ambitions, does that get a little bit more complex, a little bit more difficult?
Well, I think we need to build a more resilient business model. And to build a more resilient business model, you need to invest in local supply chains to serve local markets. And we're definitely having to do that. But at the end of the day, the demand is very healthy and our relationships are very strong. And we're very confident investing into these markets. But we do have to assume a more polarized world. And because of that, more local manufacturing capability to serve local markets.
And it becomes more competitive, especially with other countries also trying to build out their power grids. And I just wonder how you toggle between the expense of the inputs that's going up, the incredible demand by hyperscalers that have endless cash, and the average consumer that funds the utilities that doesn't. How do you face that off and limit costs in a conscious way?
I would actually say over the medium to long term, the fact that those complexities exist with all of that growth, this is our moment to ultimately create more cost competitive products because we have more volume. We can invest in our business and our factories in different ways to automate that in the end will bring costs down. So in the early stages of a growth cycle, we're having to make investments in our factories. Medium term, we're gonna win this battle, including the affordability challenge.
There's a question, and just to build on the idea that John was raising about how the world's becoming more complicated.
Yeah.
Does it raise an issue for you as a U.S.-based company that people maybe are a little more skeptical of buying from you if they're from another country, and there are these tit-for-tats going on between the leaders? Is that something that comes up?
We're a very proud U.S. company that's committed to serving our international customers, and I think they understand that, and they see that in our actions every day and the investments that we make every day. And to date, no, we have not experienced that in the end markets. It doesn't mean that every day we don't wake up and know we need to earn it. We need to earn it every day in the U.S. too, right? And that's exactly what we intend to do.
Hey, Scott, it's good to see you.
Thanks for having me again.
Hey, thank you very much. That was Scott Strazik there, the GE Vernova CEO. Just to update you on some of the headlines we got just moments ago for the president and his address a little bit later on this afternoon at the World Economic Forum. He may touch on Venezuela and Greenland. I think the bilats are going to be absolutely crucial. Is there an off-ramp? Can we resolve the tension between the European leaders and the President of the United States? There will be 5, according to a senior administration official, 5 bilateral meetings with European leaders taking place over the next day or so.
So this is going to be really critical when it comes to at least Greenland. As you say, Jonathan, can there be an off-ramp? When it comes to Alexander Stubb, when the Finnish president, he sat here with us and said, I think by the end of the week, this will be resolved. There's been so many phone calls and text messages that the president has actually leaked, and we've been privy to because of that, revolving around Greenland. But at the end of the day, you heard from the NATO Secretary General Mark Rutte today saying without Donald Trump, Europe wouldn't be here in terms of defense spending. So potentially this is part of what the Trump administration would call the art of the deal.
I'm certainly not sitting here endorsing any policy decisions coming from either side, but I'm endorsing the radical transparency. Isn't it refreshing just to see and find out what everyone really thinks at the moment?
As a journalist, getting an eye on
There's a bias there, of course.
Getting an eye on text message chats with world leaders is a dream that I didn't know would come true. And the president just, he leaks it. It's why sometimes actually it's hard to cover the Trump administration. You're on the edge of a scoop, and then Trump just blurts it out.
He just says it. Let's get you an update on stories elsewhere this morning. With your Bloomberg brief, it's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. President Trump says ICE agents sometimes make mistakes as he broadly defended the migrant crackdown in Minnesota that's led to nationwide protests. Bloomberg News has learned the Justice Department has issued subpoenas to Minnesota Governor Tim Walz and Minneapolis Mayor Jacob Frey, who are accused of conspiring to impede the federal crackdown. The European Union is ready to strike back against President Trump's Greenland tariffs. EU President Ursula von der Leyen sharing the bloc will back Greenland with a massive European investment surge and strengthen its security arrangements. Von der Leyen went out to warn current rhetoric is creating a, quote, dangerous downward spiral between allies. Vice President J.D. Vance and his wife Usha are expecting their 4th child in July. The Vances have been married since 2014 and already have 3, 2 boys and a girl. The couple announced on Instagram they're expecting another son. The last vice president to welcome a baby while in office was Thomas Marshall. That was 1917. And that is your Bloomberg brief. John.
Congratulations to the Vice President and his family. Vonnie, thank you. More from Vonnie in the next hour. Up next on the programme, politicising the Fed.
I am not sure why Chair Powell would go and support Governor Koch. I think that his sitting in the front row of the Supreme Court is a political statement. He is politicizing the Fed.
Live from Davos, Switzerland this morning. Good morning to you all. Counting down to the main event later on. It's about 45 minutes away. The president's slightly delayed, arriving into Zurich before travelling across to Davos. Ultimately, we're told by the World Economic Forum this should still be on schedule. 45 minutes away, the president addressing not just this convention, but also the world. And there's going to be a lot for domestic consumption as well. There's plenty of different audiences for this one, isn't there?
Absolutely. He's going to have to address, though, the domestic audience, especially when it comes to this idea of affordability. They've been teasing out what they're going to talk about when it comes to housing, when it comes to credit card interest rates caps, which Jamie Dimon has some interesting choice, sharp words for the administration on that this morning. And then it's going to really be about foreign policy, because the entire conference has been taken up by an island that's inhabited by about 50,000 people when it comes to Greenland. And we understand from the White House the president will address what's going on with Greenland, and then we'll be sitting down with 5 European leaders.
No Fed pick. At least not yet.
No Fed pick. But you know what? To get to the Fed, you got to get to the banking committee. And, there's a senior member of the banking committee that's been roaming around Davos as well, Jonathan.
Let's get to that right now. Under surveillance this morning, politicizing the Federal Reserve.
I am not sure why Chair Powell would go and support Governor Koch when the Fed has not undertaken an examination of whether she did in fact commit mortgage fraud. If she did, she is stealing from the American people. I think that his sitting in the front row of the Supreme Court is a political statement, and I agree with him. The Fed should not be politicized. He is politicizing the Fed.
Joining us now, the Republican Senator Thom Tillis at the epicenter of some of the conversations down in Washington, D.C. regarding the Federal Reserve. Senator, good to see you.
Great to see you.
So you're like the human roadblock now to getting anyone confirmed. So let's get into that. Is it about the individual or the process?
No, it's about the process. Look, I made the statement that I did when the news broke about the investigation on Chair Powell, because I felt like leading up to the markets, that was on a Sunday night, that want to send a signal to the markets that the Fed is independent and will be independent, and this legal process needs to play itself out.
Your signal to the market is actually potentially why we saw the market shrug off that subpoena.
Well, and I think also you have to look at people like Chair French Hill and others who weighed in. I think that it made a simple fact obvious. The Senate does have control over who gets on the board.
The Trump administration definitely doesn't like slow processes. So how long do you think this is actually going to take?
Well, it's up to the Department of Justice at this point. I didn't get us here. They got us here. So they need to go through this process, either permit the facts, fully adjudicate it, or determine what to do with the investigation.
So in other words, until this is dismissed, there's no new Fed chair?
Well, until it's dismissed, or 347 days. That's the expiration of my term.
Okay, right now, we're here where you are diverging quite a bit from some of the members of your own party, including President Trump. You've gone back and forth. You're not running for re-election. What do you tell people who try to get a sense of what the American people are going to do or what Congress is going to do? What do you tell them when they approach you here at Davos looking for direction?
Well, I remind them that, the United States, 250 years old now this year, happy birthday, but we're a very complex democracy. It's very difficult to understand. It's difficult to understand the institution of the Senate and why one Senate member in this particular Congress can control processes on committees. We're the cloture maker, we're the deciding vote. So I think it's an opportunity for us to demonstrate democracy at its best in the United States. I support the vast majority of the president's policies. A lot of the whats, but some of the hows to me make no sense to me. Greenland, the what makes a lot of sense to me. Project power in Greenland. Why would any fiscal conservative want to spend billions of dollars to buy something that we already have access to? Greenland has offered us a base for $1, folks. We could get 17 bases if you extend that for $17 versus $57 billion or whatever it would cost. Not to mention, the Danes pay about $500 million a year to just keep the infrastructure running for some 57,000 indigenous people on the island. Why do we want to take on that overhead? Is it really about projecting power in the Arctic or something else? If it's something else, maybe I'll look at the business case. But ostensibly, it's about projecting power in the Arctic. And the best way to project power in the Arctic is through the NATO forces using their Arctic skills, their ice-breaking skills, the projection of power that we come together. The synergy of the NATO alliance is far greater than anything the United States could do on its own.
Do you know any fiscal conservatives in Washington?
Well, starting with one. No, there are several. I think there are several. Look,
Senator Paul being another,
we've got
maybe?
to start thinking about these other structural decisions that we make that run up the debt already to unacceptable highs. With the froth that we're seeing here, with the uncertainty, with the increasing debt, I worry about almost a level of irrational exuberance. We've somehow been able to withstand some of the uncertainty, but there's a proverbial straw out there, and these sorts of decisions could get us closer to breaking the camel's back.
What does corrective action actually look like?
Corrective action.
What's doable in Washington at the moment?
Well, presumably, even if we were to move forward and there was some deal offered to Greenland and to Denmark, that would require congressional approval. The president doesn't have a blank check that he can continue to run up debt. That would require a process and razor-thin margins. And if it's a process that doesn't play out until next year, it's post-election. We've got to know what Congress looks like next year, or they've got to know what Congress looks like next year.
The president squarely focused on November 3rd. And this affordability push. Do you expect him to make more phone calls to Senator Elizabeth Warren, another senior member on the banking committee, than to you?
I actually, Elizabeth Warren and I are friends. We're not political friends, we're personal friends.
But
I got on the floor, of the House, I said, Elizabeth, remarkable. You've sold the president on your arbitrary caps on credit. We're no longer going to rate for risk. We're just going to be rating. Basically, what's going to happen, we're going to underbank or unbank a lot of people, and we're going to destabilize the asset-backed securities market along the way. I said, don't get me wrong. It's extraordinary that you've sold the president on this idea, but I'm going to do everything I can to kill it.
But do you think something will be done when it comes to credit cards? Maybe it's the other bill that's being floated inside of the swipe fees?
Why would we want to repeat a bad idea? If you're taking a look at MasterCard and Visa, they're working with the small retailer. The retailers have a legitimate concern. And the credit card companies are working that out. We don't need a big government arbitrary solution. We've seen credit card competition acts in Europe, and they've been abject failures. 70% of all of the travel to Alaska, for example, are through rewards. The money's got to come from somewhere. Do you think that travel is going to be funded in the future, or are those sorts of rewards and programs going to be cut? It makes no sense. It's not sustainable. And I think that we have the votes in the Congress to hold it off this Congress.
The United States has been known for process. That's one reason why a lot of businesses have invested in the United States and the capital markets that we've created. And I just wonder, as you are here with global business leaders, does it worry you that you hear more investors, more businesses looking to diversify away from the United States because of a lack of predictability of process of policy?
We have to do that. I spent nearly 20 years at PricewaterhouseCoopers and IBM Global Business Services. I would have to tell every client I advised at that time, this is a risk. You've got to reduce your buy box for any sorts of high-risk ventures, and that freezes capital. That tampers growth. That's the last thing we need right now.
Are you going to be in the room in 36 minutes' time?
100%.
What are you expecting to hear?
I'm expecting to hear President Trump give a speech.
And the content of said speech?
That's the one thing I'm certain of.
Have you got a read on the content of said speech?
No. I'll hear it when everybody else hears it. But, I will tell you the reason everybody's probably wondering what Tillis got the bling on for. This is from, we had a new tribe. The largest tribe east of the Mississippi is the Lumbee Indians. They got recognized after 137 years of abuse and neglect. Interestingly enough, they're about the same size tribe, 55,000 of the indigenous people in Greenland. I heard a very important comment when I was in Denmark. They say people can trade, but you can't trade people. We need to make everyone understand that those people on the ground have been there for 4,500 years. They want us there, but they want us there in their territory, not American territory. And it can be accomplished much more conservatively, much more sustainably by cooperation.
Senator, you remain a principal, a classy guy. It's good to see you. Thanks for being here.
Thank you.
Thank you very much. Senator Thom Tillis there, 40 minutes away, let's call it 35 now, away from the main event here in Davos, Switzerland, at the World Economic Forum. The President of the United States addressing this forum, this continent, and I would say the whole world right now, on edge.
Yep, he had a whole massive disruptor vibe coming into this Davos. He will be on time, we're told, even though it's a little bit of an issue taking off. But it's going to go about foreign policy, Greenland, of course, what Senator Tillis was talking about, but also the domestic issues at home, affordability, because you look at the polling and people are still saying prices are too high.
Just compare the drama from all the Europeans and everything that's going to take place to the optimism you might hear in the next hour from the Morgan Stanley Chairman and CEO Ted Pick, BNY CEO Robin Vince, and NYSE President Lynn Martin. All of that still to come.
All roads continue to lead to America. The only wild card is macro geopolitics. There is some sell America going on.
The world has never been this unpredictable from a policy perspective.
Everything has changed for the global economy.
There's a lot of uncertainties. If the uncertainty tamps down, then I think we'll be back in business.
Bloomberg Surveillance, live from Davos, with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
It is Davos disrupted. Big time. Live from Davos, Switzerland this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. The main event is 30 minutes away. The President of the United States addressing this convention, addressing the world. Only so many times in our careers can we sit here and say, you know what, I don't think I've seen a speech this highly anticipated for a long, long time. And this one is right up there.
And part of the reason why is because never before has one person dominated a conversation to such a degree. I mean, honestly, it wasn't just this Davos, but last Davos as well. The Davos man was President Donald Trump, and what that could mean for
and he wasn't here.
And he wasn't even here. He gave a speech. Remember that speech he gave that was beamed in? Scotty beamed in. And there was a huge crowd of people just waiting to get in for the remote screening. So this time is even more amped up, and it seems like everyone is just waiting to hear what that is.
There's going to be something for everyone a little bit later on this morning. It is going to be about, of course, foreign policy. Venezuela maybe, Greenland, the Europeans are on edge about that issue, obviously. But there's plenty for domestic consumption as well. Affordability was the big push coming into this week from the President of the United States going into the midterms later this year. That's going to be a big feature of this address.
Absolutely. And what does it mean if you are in the C-suite of an American business when the President of the United States is saying, I want you to cap credit card interest rates at 10%. I don't want you to have any more buybacks or dividends because you're privy to American tax dollars when it comes to, say, the defense sector. Or we heard from Kevin Hassett going into this. Maybe Americans can start in earnest really tapping their 401k to get on the housing ladder. He has the American public's attention at this moment in Davos. And you know what? He's always thought this was a little bit of a cabal of the global elite. And he's going to lean into that. And why these individuals here have really failed the everyday man. That is going to be, I think, the administration's spin on Davos.
Do you think it's fair to say if you're a banker right now and you don't have a credit card business, you're probably quite happy?
Oh, yeah. You're breathing a sigh of relief.
There's a guy just across from us that's feeling pretty good about that. Coming up on the programme, we'll catch up with Morgan Stanley Chairman and CEO Ted Pick, the BNY CEO Robin Vince, the Nyse President Lynn Martin joining us a little bit later this hour as well at 8:30 Eastern Time. We'll have full coverage for you of President Donald Trump's special address right here in Davos, Switzerland. We begin this out with stocks slightly lower following the biggest slide in 3 months as investors search for direction. The Morgan Stanley Chairman and CEO Ted Pick has seen it all, and he joins us now for more. Ted, good to see you.
Guys, thanks for having me.
Electric moment. You must be feeling good.
I'm feeling pretty good.
You're not going to be in this speech in about 28 minutes' time? Going to avoid that?
Yeah, I'll be with you guys.
Let's talk about how things are set up for 26. We've drawn a big distinction between the energy that's coming from European officials and the emotion they have about a place like Greenland and the optimism that people have for the broader US economy, particularly from bankers regarding the pipeline and the amount of debt issuance we've seen over the past few months, the debt underwriting that you've really benefited from that's going to fund a lot of the transition. How amped up are you about the year ahead?
Well, thanks for having me, guys. Great to see you. I'm pretty amped up. You know, we had several years where the M&A activity was going to get going, and then COVID happened, and then rates roofed, and it's taken a while for it to unglue. But this kind of, in this case, literal noise speaks to C-suite need to act, whether it's to re-globalize or reorient where your operations are, who you want to do business with. And as long as there's activity, we're busy. So cross-border M&A, large cap M&A, going to be important. AI acts as an accelerant to that, too. If you want to actually get after the productivity gains and embedded in AI, you have to have the wherewithal to do it. And if your market cap is 30 or 40 billion, that's tough. You know, how do you take a couple points off your income statement to do that year after year? But if you're 200-300 billion, maybe you got a shot. So people are thinking bigger. And then the sponsors, as you know, a couple thousand companies that have been sitting there that have billion-dollar market caps implied, they need to come. And then very importantly, you have these great companies that have been private. And over the last 15 years, we've seen companies go public to defease options or effectively be secondaries. You may actually see great companies that are growth companies, some of them in the AI ecosystem that want to go tap capital. So for the investment bank, a great period. And then for a wealth manager, leading wealth manager in the U.S. and the world, you want to allocate your capital efficiently. So very exciting.
Let's unpack some of those business lines. So let's just pick up on the IPO pipeline, the activity we could see later this year. SpaceX, OpenAI, we're talking about some absolute monsters. You and the team have been historically quite dominant in the tech sector. What are you doing right now to prepare for that moment that might be in our future?
Well, these companies, you know, you bank them for a whole bunch of years.
and you get to know them. So there's a process, obviously the formal bake-off process and then the go or no-go decision. But typically the company has a pretty good idea what it wants to do ahead of time because it's selected its group. And the stakes are really high this round because, as you say, the implied market caps of these companies are enormous, but also they are, paradoxically, they're very large, but also mega growers. They have, some of them have a little bit of a change the world feel to them. So they could become must own. I mean, one of the things that you guys have talked a lot about is so much of the equity base has become either beta or it's become kind of the 7 or 8 names. Well, what if there's some additional companies that $300, $400, $500 billion market caps, $1.5 trillion market cap? The active management community says, I want to own that. I want to own that from the time of the IPO. So I think it's not just Wall Street getting to know these companies. It's a whole bunch of investors who have either backed into early rounds or want to be there when the IPO comes.
When we were speaking with you a year ago in these seats, you were talking about how it was going to be a great year for IPOs and M&A, and it was for your bottom line. You had an incredible year. There was, though, a lot of IPOs and a lot of deals that got stymied by Liberation Day and policy uncertainty. What has to go right for some of these deals to come to fruition? OpenAI, Anthropic, SpaceX.
Well, I think part of the reason these companies are so interesting to investors is they are not rushed to go public. So there has to be an element of being patient if you're in and around the ecosystem. They don't have to come in the first half of 26. They can come in the second half of 26. They could even come in 27. But they are drawing a whole bunch of interest to names like them, derivative plays in the ecosystem as you sort of disaggregate the entire AI daisy chain. Where do you want to play? So the anticipation of the company going public almost is as important as the company itself coming. But whether they come, Lisa, in 26 or 27, they're going to come. They're going to come.
It's sort of a dissonance right now when you talk to business leaders about how much enthusiasm there is for deals and for energy in the U.S. economy. Right. And then when you hear the policymakers and you hear uncertainty and you hear sell America, how do you square those two narratives at a time where you do hear a growing number of investors say they are diversifying away from U.S. assets? I
hear you guys talking about this a lot. I think there are two separate phenomena, but they're not exclusive. One is we got the arc of history. I've gone on about the end of history and that things would get going again and that nation states would be battling for hegemony and kind of trying to, win out on the rise and fall of nations. That's just a historical fact that kind of got, there was an interregnum between Berlin Wall and COVID. We're actually back to the balance of human history as we've all studied, and that means there's going to be the kind of stuff that we are living through right now. It's just been a while. And I don't know necessarily that is something we should expect to go away anytime soon. There's going to be renationalizing, nationalizing, and that means in some cases there'll be higher country risk. There'll be maybe pockets of illiquidity. There may be opportunistic transactions or allocations that happen. But after 20 years of financial repression, we're back to live markets and live nation states. That's here. But at the same time, you have the U.S. capital markets, which are more than half the capital stock. And the reality is, very basically, as we know, corporate health is excellent. Consumer health at the top end is excellent. And obviously, the administration's getting after housing for the bottom half of the K. Earnings, as you know, grew 8% this year. They could grow in the mid-teens next year. That's double the long-term average. That's pretty good. So good corporate. Good consumer, excellent capital markets, an easier Fed that lowered by 75. Maybe there's more to go. Maybe it's a demand-driven 2026, in which case the Fed doesn't have to move. We have good inflation. We keep on powering forward growth. Or maybe it's supply side, where they're spending, but there isn't the same kind of job creation, then the Fed will help out. So they're downside cases, but just in the main, and the tailwinds of deregulation in the bill are kicking in, it kind of is hard to argue against the 26 U.S.-led growth case. Now, we could get in a debate about where asset prices should be, but in terms of just 2 years ago, we were talking about recession. Last year, we weren't sure because the administration's come in. We're not talking about that today. So for our business, very simply, we write tickets at kind of 2 times GDP nominal. And so if you think about our wealth and investment bank, if we're going to grow 5-10% on a 2 times basis, nominally, that should be pretty good for our business if we're doing our job.
Corporate health is very good. It's excellent. Sovereign health is questionable.
Right.
Can we talk about that?
Right.
The move in the last 24 hours, the live market stuff, let's get into that. The move in Japan at the long end of the curve, is that a warning shot? Is that the start of something bigger?
Well, I mean, this Japan trade's been talked about forever. I would expect that in a lot of, highly indebted countries, off the Liz Truss moment, where the demographics are poor and you don't have the wherewithal or fiat to kind of work your way through that, there could be some vulnerability. So what does that mean? That means if we sort of do our economics meets, poli-sci thing, I think that means you want to get closer to places where you can act in your joint economic interest. And I think the Japanese example is one that we should continue to pay attention to. I wouldn't be surprised if we see pockets of that now and then when, there's a little talk of the balance sheet looks lousy, but we're going to inject a little stimulus and let's see if anyone notices. Yeah, they noticed. So, you sort of have to, then you adjust. It's a trial balloon. It gets pulled back, and that's probably healthy for markets. You see a lot of that's been bought back today, but that's different than the U.S. Treasury phenomenon. That's been hugely overblown. The reality is that when we did this a year ago, the Treasury Secretary, as you know better than anyone, was talking about the 10-year being so important to keep an eye on. I think the 10-year is around 457, 455, 460. Now it's at 425, 430. So the 10-year is doing its job. There's some steepening. Yes, it's probably healthy. So I do think there's a conflation between kind of U.S. Treasury phenomenon and the world. And I think there's a difference, and we just have to continue to highlight the difference.
Very quickly, Ted, because
Yes.
you spent time, you grew up in Venezuela. New world now. Are you planning to maybe help facilitate companies go back in?
I had not prepped for that question.
But you lived it.
Thank you so much.
That's why I'm interested, because you have a different take probably than every other CEO walking around this forum.
Well, Venezuela is an extraordinary place, has a proud, but now in recent decades, very troubled history, but is, if you know your Monroe Doctrine, critical, and has, albeit, as you've talked about at length, it's more sulfuric, but very high, vast quantities of oil beneath the ground. So do I think Venezuela is going to be relevant? I think Latin America is going to be relevant. I think the hemisphere is going to be relevant in its sort of thinking around how it wants to get closer while maintaining its own, political and social independence from the U.S. But I think a coming together of some places may make some sense and may be in the broader economic interest. Back to the previous question.
That was a fantastic answer.
Thank you so much.
Brilliant. I've got one more. I hope it's not a landmine. There was some news earlier about Deutsche Bank, and I just want to breathe some life into that story. And essentially, the Treasury Secretary came out. There was some research that he didn't like, and according to him, the Deutsche Bank CEO has turned around and said, I don't stand by that research. That's basically the point. Is it difficult for the research department of Morgan Stanley to say what they think in an environment like this one? And I ask this question because I know some tremendous individuals at Morgan Stanley in research, and they are all highly intelligent, capable, and have their own thoughts about where they think we are in this moment right now. But is it difficult in the C-suite to allow them just to go out there full throttle, full-blooded, and just say what they really think about this moment?
Absolutely not. I've not had a piece of research hit my desk for a yellow light or a no-go. I think what gets a little tricky is these institutions also have desk analysts. So I don't know if this one came out of the research department or maybe a desk analyst sitting in one of the divisions. But to answer your question directly, we celebrate broad opinion. I do think, but to give not kind of the standard answer. Part of the reason you like our research is because it's not just regurgitation, because we all have a Bloomberg terminal, okay? So it has to have some kind of value add, but it doesn't have to just be provocation for its own sake. So we have industry leaders, we have sector leaders, we have Seth Carpenter, who you pointed out. I was watching you talk to him, and that was quite a moment.
When I looked down the barrel of the camera, you're actually there. Okay.
Starbucks all over my suit. So thanks for that. That was excellent. So you had at least one viewer that day, and that was me. So and Seth. But the answer is the independence of research is important. We've invested in it for all these years. That having been said, sort of writing research to just sort of provoke and kind of get your Warhol moment, I mean, that is not really fair to the institution either. And it puts it puts the particular government or whomever in an awkward spot because they read the research. So I think there's got to be a balance between independent integrity and what you're writing and writing something that actually is meant to add value and bring intellectual capital to the fore.
Send me the dry cleaning bill. I sorted that out for you.
I didn't actually spit it up. I just swallowed and smiled.
Ted, thank you, sir. Thank you very much.
Thank you.
Ted Pick there, the Morgan Stanley chairman and CEO. Let's give you an update on stories worldwide with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. The Justice Department sending grand jury subpoenas to multiple Minnesota officials, including Governor Tim Walz and Minneapolis Mayor Jacob Frey. The subpoenas are part of an investigation into whether they conspired to impede federal immigration enforcement activity. The move escalates a standoff over ICE efforts to deport people who are allegedly in the country illegally. U.S. Trade Representative Jameson Greer says another round of trade talks between the U.S. and China is possible ahead of President Donald Trump's planned meeting with Xi Jinping in China this April. Greer spoke after Treasury Secretary Scott Bessent held an informal meeting with the Chinese Vice Premier on Monday. Commuter rail service has been suspended in Spain's Catalonia region after a commuter train crashed Tuesday night. Spanish authorities said at least one person died and 37 others were injured in the crash. The news coming, of course, just days after Spain's worst railway disaster since 2013. That killed at least 42 people and injured dozens. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next on the programme, BNY CEO Robin Vince, plus the President set to address the World Economic Forum right here in Davos, Switzerland. Live from Davos, Switzerland, about 15-20 minutes away from the main event, the President of the United States addressing not just this forum, but addressing the world a little bit later on. We've been waiting for this one over the last several weeks, and it's taken on even more importance following the events of the last weekend and the tension building between European officials and the President of the United States. Following that address, full coverage right here on Bloomberg Surveillance. We'll catch up with the National Economic Council Director, Kevin Hassett, on the content on that speech and a way forward.
So Kevin Hassett has really been the one going out and promoting, teasing out what the president is going to discuss here in Davos when it comes to the housing market, when it comes to the credit card interest rate caps. On top of that, we do know that the president is not going to make a decision when it comes to the Fed chair race here in Davos. But that someone, Kevin Hassett, is still in the running. So potentially maybe he can tell us what the conversations have been like over the past 24, 48 hours.
Which Kevin's in front right now?
I don't know.
I've
It
not been
depends
watching.
on the hair. That's what I
Is
hear.
that what it depends on?
We're a lot of things.
Wash is a little bit more slick,
He's got
more
a lot.
polished.
You know, the hair is a little bit more puffy. Look, we have no idea, and it's not clear right now that the president knows exactly who he's going to pick. So we're not going to hear it now, but certainly he'll be asked. He'll certainly say, "I'll do whatever is in the pleasure."
He might get some input this evening when he sits around for a business roundtable. He's going to be meeting with CEOs right here at the forum, and he might say, you know, straw poll. What do you guys think of Rick Reeder? What do you think of Kevin Hassett?
Is that how
What do
this
you
is
think
going to
of-
work?
Well, in Tokyo, remember, he called out Scott Bessent and said, I want you to take the job. And Scott Bessent says, no, I like where I am at Treasury. So, yeah, that's how it is. Prepare for a lot of weaving, as he calls it.
That address is about 10 minutes away. Look out for that. Let's talk about the financial system and banking. I'm pleased to say that joining us now is Robin Vince, the CEO of BNY Mellon. Robin, good to see you.
It's good to be with you all. Thank you on such an interesting day.
You are
Davos
across
is the place.
20% of investable assets. I mean, that's a lot of things. What are you seeing right now? Are you seeing those changes that people are talking about, that diversification away from US assets? Do you see that at all?
Now, we really don't see that in the data at this point. I remember where we've come from, which is the US has been really an incredibly strongly performing market, strong economy. People have been predicting the US to be in some type of decline from an economic point of view, recessions. We've talked about that in the past 2 or 3 years. None of that's actually happened. And in fact, now I think you'll find, and you've heard this on your show, more optimism associated with what the next year holds from an economic point of view. GDP pretty solid, looking to potentially even expand in 2026. You've got the stimulus checks coming, the way that they actually didn't adjust the withholding in order to be able to encourage those stimulus checks. That all is a pretty good setup. Now, you've got to be in the preparedness business. We're all risk managers. And at the end of the day, you've got to be resilient because things can go wrong, things can happen. But I think that's the setup. And so reallocating away from the US in the face of that, probably not the smartest choice to make, but you've got to be diversified. So you cannot have the concentration. The US has been a pretty concentrated bet over the past few years.
Although, what's the consequence of that? I mean, there's a difference between reallocating away from and diversifying. There is some knock-on effect, which is maybe some people are calling sell America. Other people are just saying diversifying and hedging your bets. I mean, how much will that affect the funding conditions of the United States?
Look, diversification makes sense. One needs to have a balanced portfolio. It's just good risk management. It's good investment management to make sure that you've got exposure to the various different opportunities that are out there. But we certainly have seen, and, look around. We're a global firm. We provide platforms and serve clients all across the world. But when you look at the US and you just look at the facts of the performance over the course of the past decade, you look at all the innovation that's been in the US, all of the value that's created, AI is one example, technology more generally, it would have been a mistake to not have participated in the US market. And so a little bit of rebalancing, a little bit of sort of thinking about how to make sure you've got the right portfolio, whether it's equities, fixed income. We talk about 60-40. Oh, gosh, it was dead. Now it's back. Bonds. OK, where do you want to be exposed to in the bond market? The US bond market is still the most liquid market in the world, and it is still the closest thing to a risk-free asset that there actually is.
How important is it that Senator Thom Tillis stays in Senate at least for the next 364 days? He was on just a moment ago with us, and he was talking about how he's not going to hold confirmation hearings until the DOJ suit or inquiry into Fed Chair Jay Powell is lifted. I'm just wondering, from your perspective, how important it is to see that type of noise die down around the Federal Reserve for you to feel confident that this truly is going to remain the status quo going forward.
Right. Well, the senator's a great public servant, and I appreciate all of his time serving in the U.S. Senate. But I think you hit the key point, which is at the end of the day, it's not super helpful for the long-term objectives of the U.S., which are keep interest rates on the low side, to be able to make it easier for people to be able to borrow, to be able to buy a home, to be able to fund a car payment, for companies to be able to borrow in order to be able to fund and invest their businesses. For all of that, we want low rates. So creating and sort of shaking at the foundation of the independence of monetary policy, that's not really in the interests of keeping long-term rates low. So I think it is helpful if that dies down and we can get back to the business of really seeing the economy perform.
Counterproductive, which is the words you used in the past when it comes to it. Have you had any engagement with the White House about this issue, given the concerns?
We're always talking to the administration, making sure that we're giving our point of view. And so that's one of our jobs. And one of my jobs as a CEO is to be talking all across the administration and in Congress and giving them our perspective. And I do think it is in the interests, and the administration's been very clear, they would like to see long-term interest rates lower because it benefits companies and individuals. And so if that's the objective, then making sure that we're keeping the Federal Reserve sort of a little bit out of the news and not super controversial, I would personally say would be in furtherance of that objective.
It's certainly very much in the news at the moment. Robin, can we talk about your business?
Yeah,
how is BNY changing? In what direction are you leaning into?
Well, we've been reimagining the company, to be quite honest. We've got a fun history. We're 240 years old. We were born right around the time of the United States, 1784, oldest bank in the nation, one of the oldest companies in New York. That's a fun history. Now, we got to be old because we've been innovating all along the way. We've stayed very focused on customers, and our culture is important. That's how you get to be a long-lived company. So what have we been doing? We've been taking stock of what we've actually got, our real assets, our great businesses, and we've really been focused on delivering them better for the client. We used to be a bunch of pieces, kind of siloed, fragmented. And so we set out 3 years ago to say, we're just going to reimagine the company and we're going to pull ourselves together. We're going to focus on our clients. We've got these market-leading businesses. We're kind of a financial services platforms company these days. And we're going to rally round as a team. Very important, that culture, team, to be able to deliver for customers. And you can see the results. So this was past quarter for us, which comes to the sort of the end of that first 3-year chapter, was a quarter of records. It was actually a year of records for us in 2025. Record revenue, record pre-tax income, huge EPS growth. And the market's rewarded us for that. But what they're really looking through and seeing is the fact that we're delivering for our customers. And that's what it's all about.
Are you going to make it to this speech? in about 5 minutes' time?
Like the rest of the world, as you said earlier on, I'm looking forward to watching and listening.
I imagine the room's pretty packed out right now.
It will be interesting.
Hey, Robin, it's good to see you.
It's good to see
Thanks
you
for your time. We appreciate it. Thank you very much, sir. Robin Vince there, the BNY CEO. A lot to look forward to. So in about 4 or 5 minutes' time, we're expecting to hear from the President of the United States addressing this conference. As we anticipate that, let's just turn to the markets. This is how things are set up going into this main event a little bit later this morning and into the opening bell about an hour away. Equity futures on the back foot, turning lower in the last few hours or so. Equity futures down by a few tenths of 1%. In the bond market, looking across 2s, 10s and 30s. Yields just a touch higher yesterday. Yes, I know there was drama in FX as well. The dollar was weaker, yields were higher. They were much, much higher over in Tokyo, Japan. JGB's to sell off yesterday, hey? 20 basis point move at the long end of the curve, 20 basis points plus.
38 basis points over 2 trading sessions, and evidently TCW is in there buying and selling treasuries to finance some of those purchases. A real question here about what willingness there will be from the authorities to come in and to stave off some of that pain.
That's some of the price action for you. Let's get you some single names, some morning movers. Let's cross over to Danny Berger for more. Hey, Danny.
Hey, John, you saw there the NASDAQ underperforming. Here's the reason. Netflix falling 7.5% in the pre-market after earnings yesterday. Sure, the metrics were fine. The issue was their spend. They're spending 10% more on their titles in 2026, along with that Warner Brothers Discovery acquisition. We also had some earnings coming from the banks, specifically the regional Citizens Financials reporting, and it is a beat across all their metrics. Deposits grew, and the really strong part was fee and capital markets. For the mid-market deal action, it is alive and well and benefiting the likes of Citizens. Those shares up more than 1%. Finally, wrapping things up with Schwab, also reporting earnings this morning. For them, it's a miss, but it's off the lows. Are only down about 1%. It's back and forth considering most of their metrics beat, but revenue was weaker. A disappointment for a company that should have capitalized off the market volatility and specifically the equity market volatility of 2026. So, John, those shares down about 0.75% this morning.
Danny Berger. Danny, thank you. More from Danny in the next couple of hours on Bloomberg TV. Allow me to set up the next 60 minutes or so. So at some point on the schedule indicates that this is going to happen in the next 5 minutes or so. The President of the United States will address the World Economic Forum here in Davos, Switzerland. After that's wrapped up, commercial-free, throughout all of that, we'll be catching up with the National Economic Council Director, Kevin Hassett. So look out for all of that still to come right here on Bloomberg TV. In anticipation of this big event, let's turn to one of Wall Street's biggest names, the New York Stock Exchange, building a venue for trading tokenized stocks and ETFs around the clock. The Nyse President, Lynn Martin, joins us now for more. Lynn, good to see you.
Good to see you guys. It's must-see TV is what we're in the midst of right now,
it's
right?
Box office, Lynn. What are you expecting to hear? What are you expecting to hear from the President?
Don't know. I think probably it will be a focus on strength of the U.S. economy. I'm sure will be covered. I'm sure the achievements of the administration over the last year will be covered. Other than that, I think it's a guessing game for all of us, right?
What's your sense about the volatility in some of the headlines around geopolitics, around U.S. policy, and frankly, the incredible enthusiasm for capital markets here, particularly in the United States with respect to deals and IPOs, et cetera?
Yeah, absolutely. I mean, our markets have done tremendously well. You look at the growth of the major indices over the last year, they've been resilient in spite of the volatility. I think that really speaks to the strength of the U.S. economy. And to your point, we continue to attract companies from not based in the U.S. to the U.S. markets. If I think about AstraZeneca and the moves that they made, they're going to be debuting on us through ordinary shares on February 2nd. They've seen 30% growth in their stock. There's still a tremendous amount of demand to tap the U.S. capital markets because of the unrivaled pool of liquidity, unrivaled transparency, and the amazing innovation that happens in the U.S., all of which I expect he's going to speak about.
Late last year, there was supposed to be a huge boom in IPOs, and it was stymied by the government shutdown because some of those offices weren't open to actually sign off on the deals. I'm just wondering how much that slowed things down in a way that still remains to be seen whether it can all come back.
Yeah, it slowed it down operationally, but it didn't slow it down from a coming to market perspective. If I look at our pipeline, we're expecting a tremendous amount of activity in these next couple of weeks. Actually, we have a deal on the road at the moment. We have another deal going next week. Early February is queuing up to be quite active, but we really see it towards the back end of Q1 into Q2 with many deals targeting their public market debuts then.
There was a pause around Liberation Day. To Lisa's point, there was a pause around the 43-day government shutdown. Could we potentially see a Greenland pause? We did see some pushback from financial markets.
I don't know. Again, I think these companies are looking to tap the broadest investor pool possible and diversify their investor base. And there really isn't any substitute for that for the medium to long term. The private markets have done a good job in financing these companies and enabling these companies to continue to build, to innovate, to refine their strategy. But there isn't a substitute for the public markets for the long term.
Are we about to make it easier to go public? What do you
I
make
sure
of some of the
hope
recent
so.
comments from the SEC? It seems like you're aligned at the moment.
Yeah, we've been working a lot with Chairman Atkins and his team on paving a way for companies to go public. Now, that involves a variety of items. It's not just about quarterly versus semi-annual reporting. If you look at some of the pro-business legislation that a state like Texas has produced, that's designed to take away that uncertainty, that litigation risk, lessen that likelihood. It's why you've seen Texas become such a popular location for companies to incorporate in, and it's why we formed NYSE Texas last year as the first Texas incorporated exchange.
We could see some mega IPOs in the next 12 months. SpaceX, OpenAI,
Anthropic.
Yeah, the list goes on and on and on. Lynn, can I get this question in? Am I the only one not excited about 24-hour trading, 24/7 stuff? I mean, this is exhausting. We're waiting for the president. He's about to enter the room any moment and stand in front of that podium and deliver a major speech.
Yeah.
That's tiring enough. 24-hour trading, 7 days a week. What's going on?
Okay. Well, the traditional equity markets are moving to 23 by 5 at some point this year. If you recall, we had filed for that regulation in October of 2024. The reason we did that, though, is because the market is already trading around the clock.
True.
And we believe it is our responsibility to bring the regulatory structure, the certainty of trade execution to those markets to enable the buyer to know that they bought, the seller to know that they sold, and for it to appear in their accounts. That's what we're doing with traditional equities. We paved the way for that. And that's what we're doing with tokenized equities, too. Bringing the good hygiene, the resiliency, the stability, the reliability that only the NYSE can bring to markets.
And it's good to see you. I know you're excited about watching this as well, so I'll let you go. Thanks for dropping by. Thank you so much.
Thank you.
Thank you. That was Lynn Martin, the Nyse president, weighing in on what's happening with financial markets at the moment in anticipation of a major event taking place here at the World Economic Forum just moments away. Let's cross over to Washington, D.C. and catch up with Bloomberg's Tyler Kendall. Tyler, highly anticipated on the ground. Is Washington on edge as well?
Right, John, I would say Washington is, considering that we heard from a senior administration official earlier who previewed that this is going to have an America First feel as expected. The White House had already outlined that this is going to have to do with affordability, as we heard from the president's chief of staff, Susie Wiles, earlier this morning, who confirmed that President Trump is set to travel to Iowa on Tuesday. And then she says will make weekly domestic visits from now until November. And that is because Washington is watching closely as all gears go full steam ahead for Republicans and the midterms as they try to maintain their majorities in Congress. Just the quick context here is that Democrats only have to net 3 seats, a net gain of 3 seats in order to flip that lower chamber. Now, we can confirm that President Trump has arrived at the venue, so we are expecting him to, at any moment here, take that podium as he's going to be threading the needle between domestic policy, but then also foreign policy, as we know that he is expected to hit on not just Venezuela, but also, of course, Greenland, which is dominating the conversation where you are, John, because we have heard from President Trump in recent hours leading up to this speech that he is unconcerned by threats from European allies, as they have issued their grave concerns about the president's rhetoric when it comes to what happens in Greenland. But I will add that our own analysts at Bloomberg Economics say that they expect the president to use this speech to very likely ease instead of escalate tensions when it comes to the issue. And that is because we have learned that President Trump will hold 5 diplomatic meetings after his speech on the sidelines in Davos, and perhaps will glean some sort of information on what potential off-ramps could look like.
Tyler, I just want to take these pictures in full, just to give everyone at home just an idea of what's happening right now at the World Economic Forum in Davos, Switzerland. The president moments away from this address, being introduced at the moment by the co-chair of the World Economic Forum, Larry Fink. That room is absolutely packed. It took a long time to get into the convention centre a little bit earlier on this morning. And I imagine it took a lot of effort to get one of those seats in that room.
Absolutely. Individuals were lining up. This was a must-see event. This is the ticket of the week, especially given the fact that the president has completely disrupted the Davos agenda when it comes to foreign policy. He has threatened tariffs on Europe and a number of nations if he does not get what he says Greenland, which is critical to national security. I spoke with Ambassador Jameson Greer earlier. He sees this as two tracks. He's saying, yes, the Europeans bring up Greenland, but we have a trade deal. It's like, but the Europeans are saying that now you're adding more tariffs, so that might mean that negates the prior trade deal. There's a lot of discussions around Greenland and what this means for Europe. And the fact of the matter is it could have unintended consequences we saw on full display yesterday when it comes to the Prime Minister of Canada.
The Prime Minister of Canada with a very blunt, I would say almost aggressive speech yesterday. We've all talked about this radical transparency that's come to the surface at this forum, where people are no longer saving it for behind closed doors. They're saying it just up front on the record about what they think. Prime Minister Mark Carney saying this is not a transition, this is a rupture. He said it's a new world order. Middle powers need to understand that. Now, my question, Lisa, is, OK, that's the conclusion. Now, show me the action. What are the concrete steps you'll be taking with that in mind?
Well, this is part of the problem and part of the reason why you're getting radical transparency from President Trump, but much less than that from a number of different leaders who are trying to be highly diplomatic so that they don't have targets on their back. And there's a real question. If you can't come through, then do you just make yourself persona non grata and put yourself in a worse position in some of these negotiations? It's a dance right now. And you could feel that in some of the text chains that were released with the president on Truth Social.
I don't think we even need the text chains anymore. Just listen to the words of the French President Emmanuel Macron in the last 24 hours, accusing the Americans of trying to subordinate the Europeans. Does the president respond to that in this address of the World Economic Forum as he steps up to the stage and addresses not just this forum, addresses the world in a much anticipated speech at the World Economic Forum, the President of the United States?